So this property we got for a client at the end of last year, and it represents a pretty excellent refurbishment and repositioning upside. The property is about $2.3 million, and we're going to spend about 400 grand on the refurbishment. And at the end of the refurbishment, the property is worth about $4.5 to $4.6 million. So it's a pretty good deal. Now, let me take you through it and explain exactly what's involved and how we found it and how we actually negotiated the deal. There's actually quite an interesting story behind this property. First up, just want to tell you the location. This property is located in Toowoomba. Specifically, it's 207 to 209 James Street in Toowoomba. Now, if you are familiar with Toowoomba, then you know James Street is probably one of the busiest streets in Toowoomba. It's got extremely good exposure, and it's one of those sort of arterial roads for you to kind of cut through Toowoomba sort of east to west. So this property is located right here, and it's got extremely good exposure. And what's really unique about this property is that it actually sits on 3 titles. So if I zoom in a little bit more, you'll see that the property encompasses number 207, number 209, and then the back property here on Riley Street. So there's actually 3 properties under 3 titles, but we bought it in one line. So what's the opportunity, and why is it so good? Well, as you can see from the Google map photo, this property is really run down. This property was owned by one family for the last sort of 50 to 60 years, and as you can see, they haven't really maintained it very well. And what's exciting about this property as well is it's got a mixed use configuration. It's got a few shops towards the left, you've got a couple of residents up the top, and then you've got a couple of warehouses or sheds towards the right. But straight down the middle, I'll show you in a different sort of photo in a second, there's a number of sheds down the middle in the center of the property as well. So, if you look around James Street, if you've ever been, to Toowoomba, this is, again, like it's one of the main streets and it's a very busy road. So got extremely good exposure. So this property is actually very well located. It has a driveway that wraps around the back as well. So you've got really good access both from James Street and also from Riley Street. So you've got really good access, really good exposure. The property overall has really good bones, but it's been really poorly managed, and the property's deteriorated, over the last, few decades. And as a result, the tenants that are in there at the moment, they're not really good quality tenants, and also they're paying extremely low rent, which I'm going to get into in a second. But before I get into the numbers, I just want to show you a little bit more about the property. So there's a few more photos here which I can run through and show you. As I mentioned, this property was bought late last year, but as you can see, in terms of location, it's superb. This is what the internal looks like. So the interior, this is what it looks like. So this is, one of the warehouses, and as you can see from the photo here, it's been really poorly managed and maintained. So a lot of the heavy lifting will be done fixing up the floors, fixing up the driveway, and a bunch of other things that needs to be done as well. So here's another angle on the property. As you can see, it's an absolute sort of disgrace, so to speak, for a property in this location. It just hasn't been really well managed. But the good thing is, we could take advantage of that and really turn it into something really spectacular. So if I show you a couple of other photos, you'll see that here's the main driveway down the middle. You see like the driveway is all pretty much deteriorated, and if you look at like some of the excuse me, like the downpipes, like they're not really done very well. That needs replacement. Here's a set of toilets. So this block of toilets is shared between 12 tenants, 10 tenants, a big pardon, in this complex. And this toilet block has not been upgraded for 30 years. It's dark. It's stinky. It's gross. But again, there's where the opportunity is. The opportunity is for us to get in there, spend a bit of money, really repositioning the property, and get a really decent uplift on it. So let me show you the numbers now and why I thought it was extremely positive. Why I felt it was extremely positive. So so this is our typical sort of feasibility and a template, and the way we designed this template is that it's got just enough information for you to understand the deal, but you don't need to be a valuer to understand it. A lot of our clients are very busy business owners, and they don't have hours and hours to go through all the feasibility. So we've kept this template relatively straightforward, but it has just enough information for you to make decisions, key investment decisions. So this is the address, as I mentioned, and this is the particulars of the property. So the total building area here is almost 1,700 square meters. Total land size is about 2,450 square meters. The rental at the time of purchase was about $143,000, which equates to under $85 per square meter, which is extremely low. And I'm going to explain I'm going to explain why it's so low in a second. The property had an asking price of $2.3 million. We paid the asking price because we didn't want any other buyers to take it off us, because the upside is extremely good, which I'll show you in a second. So based on the purchase price of $2.3 million and the net income at the time of purchase, the property was giving about a 6.25% net yield, which is not bad in the grand scheme of things. But obviously there's a lot more upside, which I'll show you in the second tab in a second. So when we saw this property, what we did immediately was we had a look at a bunch of leasing and sales comparables. So, these are all the properties that are really similar to this property in terms of location, quality, and size. And you can quickly see everything's being rented or at $120, $150, $200 per square meter. Nothing's been leased less than around $120 per square meter. So immediately we know there's really good upside. And because this is a mixed-use property, there's a bunch of retail, a bunch of industrial, and a bunch of sort of residents. We had to go and look at different comparables as well. Obviously, you see the retail is a little bit more expensive, and obviously the industrial properties a little bit lower. That's the nature of these type of properties. But as you can see, the property is definitely paying under market rent. And then we had a look at some sales evidence as well. There hasn't been a lot of sales in Toowoomba, but there's been enough for us to look at it and get a really good feel for where the market sits and what sort of cap rate and what sort of build per square meter and land per square meter that's the consistent in the market. So we're able to establish sort of market prices with the evidence that we've collected. So going to tab 2, so putting all the market evidence that we've collected together, we'll be able to actually formulate a view on what the market rent and market price should be for a property like this if it was well managed and it was done up properly. So in terms of the industrial parts, so the warehouses, the sheds, we felt that the market rent should be somewhere between $130 to $150 per square meter net. The retail should be somewhere between $240 to $260 a square meter. And we've also gone and had a look at some office space. And you're asking, well, there's no office space. Why are you looking at office space? Because part of the strategy, and I'll come back to that in a second, is to convert the residential into office space. So why do we want to do that? Well, a couple of reasons. Number one, financially it makes better sense. And then number two, you probably end up getting better tenants as well, because the type of residential tenants that's going to live above a couple of mechanics and above a shed, you could potentially argue that they're probably not the type of tenant that you would probably want to keep long term anyway. So by converting the the residential space into office space, it actually opens up to better tenants and also potentially better financial outcome as well. So you can see from the floor plan here, there are two residential units, which we can look at splitting or converting into office space, which could be done quite easily. So if you look at sort of unit 2 here, it's already got 3 bedrooms, but we can also, cut this up into 4. So there could be 4 offices here, and it's just like a communal kitchen, sort of breakout area, and obviously shared toilet facility as well. So the type of tenants that we're probably aiming for, sort of your sole traders, where maybe it's a chiropractor, maybe it's an architect, maybe it's an accountant. There's plenty of parking along the street, plenty of parking around the corner. So giving them that sort of flexible workspace. And then we can also continue that in unit 1 as well. So unit 1's already got 4 bedrooms, which we will convert very easily to offices. But we could also create a corridor down here, down the living room, and then create another 2 to 3 offices. So all up, there's going to be about 10 tenancies, which wouldn't be very difficult to fill. But just by tweaking a few things here and there, we can significantly increase the rental. So at the moment, the residential tenants are only paying about, combined about $40,000 in rent. We've worked out that a worst case scenario for the office space, we can get $70,000. And then obviously on the upper end, we could probably get about $80,000. So we're essentially doubling the rent just by spending a bit of money converting that residential space into office space. And because the zoning is mixed-use zoning, we can do that. So having a look at the rest of the market values, we feel like the price per square meter of land is somewhere between $1,000 to $1,500 per square meter, and the price per square meter of build would sit somewhere between $2,000 and $2,300 per square meter. So how does that work, and what does that mean? So by buying the property at $2.3 million, effectively, the price per square meter of land is $939 per square meter, which is below market. And the price per square meter of build is $1,355, which is well below market. So we immediately can identify that we're buying this property below market, which is fantastic, which is awesome. So so what's next? So the next thing is we're going to have a look at the tenancy schedule and figure out the timing of the refurbishment. So thankfully, all these tenants have short-term leases. They all expire within sort of 6 to 12 months from the time of purchase, which is amazing because that means we can go in there and start fixing up the property sooner, rather than later. So if you look at some of the rents that these guys are paying, they're paying, some people are paying $73 a meter, $60 a meter, $66 a meter. Like the rents are all over the place. So the overall rent that's been achieved is like $85 per square meter, which is extremely low. Now, based on our market rental that we've adopted and that we're projecting, once a property is refurbished and well managed, we should get rents somewhere between $300,000 to $327,000. So there is a significant jump in terms of rental income once we complete the refurbishment and repositioning of the property. Now, we're also anticipating that more than half of these tenants will probably go because they probably can't afford the rent, and frankly, some of these tenants we probably don't want to keep, particularly like the mechanics and things like that. So long story short, once the property is refurbished, repositioned, we can expect rents of between $300,000 to $327,000, which is a significant jump, which is more than double the rent. So what does that all mean? So if we base it off the purchase price of $2.3 million, basically we are increasing the yield from 6.25% to somewhere between 13 to 14%, which is phenomenal, which is huge. But what does it mean in terms of capital value? The capital value is huge. So if we adopt a conservative cap rate of 6.75%, which is conservative in my opinion, the valuation of a property after the refurbishment which sits on between 4.4 to 4.8 million dollars. So if you're buying something for 2.3 million, and the property ends up being valued at, let's call it between 4.4 to 4.8, you're basically doubling the valuation of the property, which is phenomenal. So the upside on this property is really clear. It's really obvious. It's a no-brainer. So the question is, how much is it going to cost to actually do the refurbishment? So this is where the feasibility comes in. So we take a look at a number of factors, and it will give us sort of an end sort of net profit projection. So let me walk you through this. It's pretty straightforward. So we've got an acquisition price of $2.3 million. There's stamp duty, there's closing costs, legal fees, building inspections, etc. Some consulting fees. So your total acquisition cost for this property is about $2,468,000. Now we are anticipating, as I mentioned, that we may need to replace all the tenants, at least half of them. That means there'll be some leasing costs involved. So we'll probably need to pay a local agent to find us new tenants, and then we need to pay them a commission. So that's the sort of commission we'll probably need to pay. And we'll probably need to pay the incoming tenants some incentive as well, some rent-free period, etc. So if we quantify all of that, it works out to be about $150,000. There'll be holding costs because this project's going to take about 12 months to pull off. So about 12 months worth of holding costs. I'll come back to the refurb. There'll be some obviously outgoings as well. But the good news is you'll also be receiving rent over the next 12 months, which will offset some of this cost. Now, coming back to the refurb, so we budgeted about $425,000 for the refurbishment, which includes doing the redoing all the bitumen, redoing all the concrete floors inside the warehouses, repainting the facade, putting in new security lighting, doing the fencing around the back, security fencing around the back, upgrading all the downpipes, fixing a couple of holes in the roof, relocating the grease trap, doing up the toilets again, removing the spray booth, and sort of reconfiguring the electric meter as well. So all up about $424,000, which is what we've budgeted. And thankfully, we're pretty close because we've got all the quotes back now, and it sits at around $400,000, which is amazing. Because our budget still allows a bit of buffer room, which is amazing. So all up in terms of your repositioning cost is going to cost about $624,000. So your total project cost is about $3.1 million, and it's going to take about 12 months to pull off. So if we're going to adopt $4.4 million as the new valuation, which is the lower end, then you're sitting at a net profit of about $1.3 million, which is, for me, I think it's pretty good, because that represents about a 42% project margin, so on cost. Okay, so it's going to cost you, 3.1, and you come up, there's valuation 4.4, that's your profit. So you're walking away with 42% project margin within 12 months' time, which I think is a pretty good deal. So how much is it going to cost to finance and all of that? So we've worked out that the total equity or cash or capital that you need is about $1.6 million. Okay, so about $1 million goes into the property when you purchase it, and then $600,000 goes into the refurbishment and releasing of the property. So in total, about $1.6 million of cash needs to be done. We need to do the project, and the rest comes from the bank. So if you're putting in $1.6 million and you can spit out $1.3 million in 12 months' time or more, in my opinion, that's a pretty good result. So this is the deal of the month, and it's, in my opinion, it's a no-brainer. It's a great deal. It's a low entry cost, and the upside is really, really obvious. So if you're interested in finding deals just like this, then definitely hit me up on the link in the description, book in a call, and I'm more than happy to have a chat to you about what else we can do for you as well. So I hope you enjoyed this video. If you got value out of this video, then please like, and please hit the subscribe button, and I'll see you in the next video.